Hello and welcome to another update video about Bitcoin. Today we've got a catalyst, we've got the unemployment rate, non-farm employment change and average hourly earnings coming out. Did explain in the last video yesterday that obviously here, depending on what is the outcome, we'll see a positive or negative catalyst for the DXY, the dollar, and because of the, you could say negative relationship between the between crypto and the DXY, that could lead to some volatility, obviously. And for example, with unemployment rate, the forecast is 3.6%. Typically, it says here that if actual is less than the forecast, and the forecast is 3.6, it would be good for currency, so good for the US dollar. That would rather be negative for crypto. So obviously, if actual is higher than forecast, it would typically be good for crypto. Then we've got the non-farm employment change here as well, forecast 228K. If actual is greater than forecast, it is good for the US dollar. If actual is less than forecast or lower than forecast, it would be good for crypto. Average hourly earnings 0.3%. If actual is greater than forecast, it's typically good for the US dollar. And therefore, if actual is lower than forecast, it would be good for crypto. Just doesn't always work like that. It's not as simple as that, but so typically that's what you would expect, what you would anticipate. Crypto market movement wise, not much is happening, to be honest. All the comments still apply, so I really want to see some kind of a move. I already had an idea here how to construct that in a different way, but to be honest, you can try to do all kinds of magic here with the lower degree wave counts. In the end, what is really important is the pivot, and in this case it would be the 78.6 FIB level, the 27,060 level. As long as we're holding above that, I am assuming a direct breakout. Even better would be to hold 27,560, because then you could say, okay, either I've got this 1-2-1-2 setup and could rally directly from here, but price movement at the moment doesn't give a lot of confidence, even though it would allow for one more low. 27,560 isn't broken yet. This is the key support level for the yellow 1-2 setup. After that, we could rally in a third wave to 30K and more. And if we drop below 27,560, what would happen then? Well, then we just reset this wave 2 in blue. This is the first thing that I'm going to assume, because it's the next pattern that is then available. And in terms of wave count, then, I've got this already as a WXY, where we bottomed on the 3rd of April here in a wave 2, and then a 5-wave move up and a 3-wave move down. But the thing is, if we come down too low, then I will have to assume that we maybe do something, that I completely normally like to avoid in terms of wave counting. But I might have to, I might have to look at it in a way that I'm saying, all right, was it a WXY XZ pattern, which is completely, so normally double X or X and then here the Z, right? Which is a super complex corrective pattern. I normally like to avoid it. It normally doesn't occur. It's so super rare. But that might be a possibility, because when markets seem to be doing very complex corrections, which the market seems to be doing here, then this might be something to do, to work with. But again, that's sort of the academic side. It doesn't really help you with trading. What will help with trading is the pivots, the key support areas, to know when do actually probabilities shift. And that's where we've got those 78.6 FIB retracements. So that means we've got here the possibility of a 1-2-1-2 setup. If the 27,560 level breaks, we've got 27,060 as next support. If that breaks as well, it will be very, very unlikely that the wave 2 is still ongoing in blue and will probably reset for a deeper wave 2. I had a few emails of people but giving me different wave counts, which are of course possible as well. And some of them suggested deeper retracements. And absolutely, that's why we've got these deeper support areas on the chart, and we need to prepare for a possibly deeper pullback. All I'm saying is that a direct breakout is likely as long as we're holding above these levels, and I'm assuming a direct breakout is happening as long as we do that. But of course, Elliott Wave, and that's what the benefit of Elliott is It tells us exactly when we have to change our view. Yeah, it's important to be flexible in these markets. Absolutely critical characteristic to stay flexible and be able to change your view and have an open mind, because in the end, the context is changing. Such an Elliott wave pattern is only valid in the current context. If the context changes, then of course our view has to change as well. And if we lose 27,060, we have to assume that the next higher degree pattern is in play. And that would take us down, first of all, into this area between 24,940 and 26,270. I would like to say, I'm leaning towards a direct breakout, but again, it's just taking longer. Also over the long weekend now, I'm not sure how much we're going to see. Ideally, we do see quite a bit because, we've got obviously the catalyst today with the unemployment data, different metrics being released. But then, we had unemployment data coming out all week, different kinds of unemployment data in the US, and the market didn't really move at all, didn't do much. Ethereum, though, is a little bit further advanced in terms of its wave count, but yeah, I guess, again, it's just a message here that it's the patience game. I can't change that, unfortunately. These periods this is now really getting to quite, a bit of a boring period because it's nearly 4 weeks, and it normally isn't that long. You get your 2 weeks, you get your 3 weeks. This was terribly long as well, but it typically is around Christmas and New Year's Eve. That's normal. That was the case last year as well. Last year and the year before. But yeah, this is now, again, I guess around the holiday period, you get that. But yeah, that's currently here the analysis. We just need to understand that the rallies of those lows were impulsive, and of course, deeper pullbacks are always possible, but it's impossible in the early stages, or even when we're consolidating at such a high level, to say if the market needs a deep retracement. In the beginning, obviously, we were looking for deep retracements in these wave twos, because that's what you generally would expect. But the market sometimes doesn't do what we expect. So the market decides alone if it needs a deep retracement. That's why we can only really trade and analyze what we see. That's why we have those pivots, why we have those support areas on the chart. And because we are holding so well those higher degree, you could say those imminent support areas, there is at the moment no need to focus on the deeper ones. But of course, they are there, and a deeper pullback is possible. It's not unlikely that we get a deeper pullback in a wave 2. It's actually anticipated. But the reason why I'm saying I'm in favor of a direct breakout, at least as long as we're holding those support areas, is because for now we're holding support and we have to treat it like that. Of course, if they break, we have to look for the deeper pullback. We have to know, though, that in a wave 2, deeper pullbacks are common. So we at least have to consider it and be prepared for it. Okay, that's sort of the message here around Bitcoin. Note that ideally what the bulls need to achieve is a breakout above the 28,830 level first. That would already be a really good start. Okay, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure you follow us on Instagram and Twitter, and check out our trading course if you want to know more about cryptocurrencies, Elliott Wave analysis, technical analysis, trading. Then check out that course. It's a video course. You'll find it on morecryptoonline.com. Thanks a lot for watching. Bye-bye.